this sort of a exit poll, if these projections were to come true, you're going to see markets fly, Nikunj. Irrespective.
Fly? I mean, already we've seen markets fly.
No, I mean, you're going to see a monster of a rally even from these levels. I'm not talking about the immediate short term, but from a 3 to 5 year point of view, you're going to see the markets going up only. Fundamentals will come later. Markets will try to price in most of the positives that a very stable government can provide, and chief among them being GST. Because it's only the BJP states which were resisting the GST, and that could add, as some eminent industrialists say, 1.5 to 2% of GDP, and that could change the entire scenario.
Fair point. So I'm with you that on a 3-year basis, on a 5-year basis, things are looking interesting and maybe things are looking up. But let's talk about today, tomorrow, this week, next week. Today markets will react to exit polls, and on 16th we have a grand finale. As a portfolio manager, how are you approaching this event? Are you happy to approach this event with long positions, or it's time now to raise some cash, maybe wait for better entry points, because the move has been extraordinary?
So the decisive, call would only be taken on 16th when you see the actual number. These are all projections whereby most of media people are saying, or the exit polls are saying, that you have a full-fledged majority. I mean, that is not priced in the market.
That's not priced in. So at 7,000 on the Nifty, when Nifty is trading at a P multiple of 15 times plus, inflation is high, bond yields are above 8%, you are still saying that a stable government will take the markets up?
It will.
Hope against hope, Manish.
No, it is that way. You could see the markets in fact touch 7,800 to 8,000 just after these numbers. If these numbers were to come true, I mean, you could see the markets fly. The only dilemma is that the most hated names on the street in terms of stock names are the ones which are giving you the best returns today. How do you position your portfolio? Whether you jump into these names or whether you stick to your philosophy of quality growth, that is the entire dilemma. I think we have got...
What are you doing?
I mean, as of now, we are not doing anything till the 16th, because exit polls have got it horribly wrong in 2004 and 2009. But the caveat is they have got the assembly results in terms of exit polls fairly correct.
No one predicted up.
Yeah, nobody predicted up, except for Delhi elections. If you see the other states, they have more or less got it right. But caveat is 2009, they got it wrong. 2004, they got it wrong. But given the voter turnout and, most people are quite vocal if they want to have a change. And if that be the case in terms of what the exit polls shows you, I mean, we are going up.
Okay. As a fund manager, you could have a different strategy because you have a different set of clientele. You have a different time period. But a lot of our viewers who are watching the show are retail in nature. How should a retail investor really approach this event? I mean, that is the big question. Because for those who've bought at lower levels, they're already in the money. There are some stocks which are already in overbought zone. Is it time to, let's say, lock 25 to 30% of gains now?
No. I don't think I'd agree with that, because I think, there's a long way to go. These numbers will really take the markets to newer levels, and not only in the immediate short term, but even in the next 1 to 3 or 5 years point of view. This may be just the beginning of a very, very strong bull market. Yes, we are talking at 7,100, but that's the way it is. 7,000 could be the floor on the Nifty.
What about earnings? Ultimately, markets are slave of earnings. You know that better than me. There is no evidence of any kind of a big economic turnaround. Whatever sectors or wherever growth is coming, growth is largely coming from exporters, IT and pharma. And unfortunately, in this leg of the rally, IT and exporters are taking it easy. So companies which are growing are not, those stocks are not moving up. Stocks which are growing up, or prices where stock prices are moving up, those companies are not growing.
No, that is, driving, looking at the rear view mirror. You have got to think as to how the things could play out in the event of a change in government. As I said, GST is the next big event. And that could throw the entire earnings picture into a tizzy. Because you know that the number of taxes are going to go down. The cumulative impact of those taxes which you pay today are going to be lesser than what you are going to pay, which you are paying today. And that is not going to be entirely passed on to consumers. So you are looking at a margin expansion. And markets really reward margin expansion like anything.
Manish Sonthalia, HPCL, BPCL, that's the flavor of the moment. In fact, as we speak, BPCL is the biggest gainer on the Nifty this year. What's your sense there? Long way to go for HPCL, BPCL, or now these stocks are priced to perfection?
No, Nikunj, they are not priced to perfection. In fact, Last night we saw 1 rupee 9 paise increase in diesel prices. I mean, the conviction, to raise diesel prices even now when the under recovery is less than 6 rupees a litre. That is what Kirit Parikh committee recommendations was, that you could stop at 6 rupees a litre, increase the prices. But we are just 12 months away from full deregulation of diesel. I mean, that's going to change the entire trajectory. You could see a situation where these companies could be, 15 to 20% ROE companies. I mean, then you won't get it at these valuations, for sure. But the whole thing is whether, the new government or the present government, whatever, have the will to really pull the plug on this one. Just keep on increasing diesel prices, because the under recoveries are going to come down by almost 50%. We are looking at 1,20,000 crores as the under recoveries is going to come down to something like 88,000 crores. That means profitability, the interest burden on companies like HPCL, etc., are going to come down significantly. There's going to be saving on interest cost, and ROEs are going to move up.
Okay, so let's look at OMCs. There are 3 listed OMCs: HPCL, BPCL, and IFC. All of them have different dynamics. BPCL promises you a global exposure. HPCL promises you a big exposure to diesel. That's where all the problem is. And IFC gives you access to brand, size, and new refineries. So out of the 3 listed OMCs, which is the best one to buy?
Look at it this way, the 2 OMCs, the HPCLs and the BPCLs, each have a turnover of more than 2 lakh crores.
Yeah.
And what is the market cap? Roughly around 15,000 crores, 330 crores is the paid up equity of BPCL. You're getting the entire company for something like 15,000 crores. And how is that possible? Obviously, the net profit margins of these companies are abysmally low. When you have these things going away, the net profit margins are going to, and the turnover is huge and only growing.
So you like BPCL?
I think the BPCL offers you a very balanced play on Mozambique, where I think, according to my calculations, even given the amount of money that they're going to require for exploration, they're going to generate a 20% ROC on that business in the long run. I mean, that's not there in the plan. But the whole call is we have got to believe that this event is going to play out. That this 50 paisa hike in diesel prices is going to continue. It's not going to stop.
Okay.
That is...
So long oil marketing stock, that's a broad call.
Long term, it looks like a good play. Let's see.
Manish, the newsmaker this morning indeed is rupee. It's gone below 60. The easy trade is, if rupee appreciates more, exporters will underperform. IT, which has been an underperforming sector, will underperform more. Is it time now to think smart and outsmart the market, be a buyer in IT?
Look, Nikunj, there's going to be a deluge of dollars. There's no doubt about that. You'll have a lot of money coming in if these numbers are to be true. The whole point is that rupee is going to appreciate. But my sense is the central bank is not going to allow significant appreciation. Why are the markets worried about IT and pharma names today? Because if rupee appreciates by 4 to 5%, there's going to be an earnings cut. That's basically the trade that is playing out. I don't think that is going to happen. The central bank is not going to allow, because it's going to impede your exports. And at this stage in the economy, India can least afford a dip in exports due to currency.
But the central bank has again and again gone on record and has indicated that, look, we are not in the business of controlling the currency. We are simply in the business of, managing the volatility. So job of any central bank is to really smoothen the curve. They are not going to protect the rupee or help the rupee. When rupee was falling, they were not supplying dollars, and now rupee is appreciating. They are not absorbing dollars.
I mean, see, of a size of India, the economy size of India, $1.89 trillion, dollar reserve, forex reserves of $300 billion, looks a bit small. And it's a godsend opportunity. If due to sentimental reasons, there's a huge deluge of dollars, I mean, central bank would be more than happy to build in forex reserve. It's only going to help India's cause. Okay. There's going to be more stability, etc., which is going to move things forward as far as the interest rates, etc., are concerned. I mean, there's a big play. If there's a whole deluge of dollars, you're going to see interest rates actually come down. I mean, caveat monsoons, etc., inflation.
Okay.
That is,
as we speak and after this interview, what are the stocks you're planning to buy?
No, Nikunj, I am staying status quo till the actual numbers are declared on. If these numbers are declared on 16, there is a case of making some.
So are you happy to buy at 7,500?
I'm telling you, these markets are going to be seeing a 7,000 as a floor on the Nifty for the next 3 to 4 years. Okay. If these numbers are to be true. Okay,
so what will you buy first? Assuming that exit polls, the markets get what they want on 16th of May. 3 stocks. Tell me the names.
I mean, it's difficult to tell you the names, but what I'm saying is there is a case for movement into cyclicals, but we will not deviate from our philosophy of quality, growth, longevity,
Give me some names which you're happy to buy, let's say 5% higher once you think the event factor is out.
I mean, capital goods, infra, these are some of the names, but within them, which are the good ones? That is, and I think one really play, if you want to play everything related to the cyclicality of sectors, the rotation of sectors, it's going to be banks. Everything gets...
Names, that's what you want to
I mean, you know the names. Stay away from the public sector names. There are problems galore.
So HDFC Bank looks good?
HDFC, Axis, ICS, I mean, we are not going to buy all of them, but these are some of the names. Okay. Private sector names, quality, banking sector is going to be a big beneficiary if these numbers are to be.
So stick to banks. Manish Sonthalia, appreciate your time. Fantastic to have you on the show.